Today's video was brought to you by Masterworks. Keep watching to see how China Update viewers can skip the waitlist for some of the most popular pieces. Welcome to another episode of China Update, where I provide you guys with the most up-to-date political, economic, and geostrategic analysis on the world's #2 economy. My name is Tony. Let's jump in. Okay, happy Tuesday everybody. Just a piece of housekeeping at the beginning of the episode. China is currently on holiday this week. We still have good analysis and reports internationally, but because the country is on holiday, there might not necessarily be enough to justify a full China Update episode every day. So there is a possibility that there will not be an episode tomorrow, and then we'll be back on Thursday, so just a heads up. Okay, let's jump in, and before we move into the main stories, which are focused on the economy, we need to briefly touch on one matter. In the last 24 hours, multiple US media outlets are reporting, citing unnamed officials, that the US Defense Department is preparing for House of Representatives Speaker Kevin McCarthy to visit Taiwan later this year. The trip is reported to be in early stages. McCarthy has expressed in previous interviews that he does want to visit the island this year. If the visit goes ahead, it would represent the most high profile from a US politician since Speaker Pelosi's visit last year. Of course, we remember Pelosi's August the 2nd Taipei visit last year caused quite a stir, with Beijing at the time warning of serious consequences. Beijing's ultimate reaction to Pelosi's visit was a near-complete blockade of Taiwan, followed by live-fire military drills around the island, which were unprecedented in scope. Beijing also suspended a range of communication channels with the United States. Eurasia Group, in a research note published yesterday, observed that since the Pelosi visit, it has put pressure on future speakers to visit Taiwan too, quote, in order not to appear too soft on China, end quote. They also predicted that Beijing's response to a McCarthy visit will likely be less severe than Pelosi's, writing, quote, Beijing's response may also be influenced by its understanding that McCarthy, as the leader of the opposition party, is not an emissary of the White House, end quote. I largely agree. Okay, now let's move through our key economic developments. We remember from last week, officially, PRC property investment dropped 10% to 13.29 trillion yuan, $1.98 trillion in 2022, and some commentators believe the drop may have been more acute. This is the first time property investment in China has declined since the 1990s. Construction was hit even worse, with new home floor area under construction down 40% in 2022, year-on-year. Yan Yuejin, director of the Shanghai-based E-House China Research and Development Institute, observed last week that even the official drop is concerning for Beijing and, quote, a state of deterioration, end quote. Adding, quote, Beijing has the clear desire to improve property investment with its recently announced 21-point plan to optimize developers' balance sheets, end quote. Yan expressed that land sales were, quote, even more terrible, end quote. Land sales by value saw a frightful 53.4% decrease. If land, or we should say land use rights, do not see rebound this year, it could be devastating to many local governments' financial position, especially in poorer regions. The property sector, as we have explored in previous videos, has long been a major driver of the Chinese economy, and even if the government can revive it, likely at great expense, most, including senior Chinese officials themselves, agree that the sector will not return to its former golden growth era, and new sectors will need to replace it to achieve politically acceptable growth rates. Quote, starting from 2023, the property sector will play a more diminished role in fueling broader Chinese economic growth, particularly when benchmarked against trends evident over the past decade, end quote. Others agree. Quote, there's no question that the property sector must play a diminished role in China's growth. A 3-decade property bubble has left China with a vastly oversized property sector and perhaps the highest real estate prices in the world. What is more, the sector has been adding new apartments to the economy at a rate that exceeds by 20 to 30%, and probably more, the country's actual housing needs. But it's important to understand why Beijing will do all it can to slow the pace of its contraction. It is precisely because the sector was allowed to become so important in driving the economy that unless any meaningful contraction is balanced by growth elsewhere, the consequence will be a sharp, self-reinforcing contraction in the economy. Ideally, a surge in consumption could balance declining investment in the property sector, but after 15 years of promises, it is safe to assume that this will continue to be difficult. Ditto for productive private sector investment, which tends to be driven by consumption." End quote. We will have more on consumption later in today's video, and next up, international investors move back into Chinese assets. But first, with China's reopening, as we have seen, many investors are pouring back into the market. Big-time investors seem to want out of the S&P, which just had its worst year since the 2008 crisis. Historic times, but today's video sponsor, Masterworks, has been helping over 600,000 people adapt through it all, paying out $25.8 million last year alone. They've been featured in financial publications like Business Insider and Financial Times, and recently awarded one of LinkedIn's top 50 startups. Because of Masterworks' office in downtown Manhattan, their team, drawn from institutions like Bank of America and Salisbury's, is revolutionizing art investing. Masterworks doesn't do NFTs or crypto. They're investing in real, physical paintings, qualified with the SEC, which I've linked to in the description. Masterworks is a great way to diversify your portfolio. In fact, some of you may have already seen returns from Masterworks. Since my last Masterworks sponsored video in December, they have sold another 2 paintings, an Andy Warhol for a 10.4% net return, and a Cecily Brown for an outstanding 35% net. Fine art isn't going to be your entire strategy, but Masterworks provides an attractive option for diversifying and potentially driving returns. So, if you want to check them out, I've left a link below. Once again, I'd like to thank Masterworks for sponsoring this episode of China Update. Okay, and speaking of investments, a new report from Bank of America Global Research over the weekend argues that China's sudden policy U-turn on zero COVID has driven investors to pour back into emerging market debt and equity funds these last few weeks, boosting many different asset classes, not just in China itself, but with major trade partners and popular tourist destinations for Chinese visitors. Hong Kong's Hang Seng Index closed on Friday at a 6-month high. Meanwhile, turning to consumption, on the mainland, businesses and analysts alike are anticipating a surge in consumption during and soon after this year's Lunar New Year holiday period, especially as we explored in yesterday's video, as it looks like most major cities have passed their peak infection levels. One salesperson at a major market in Shenzhen, speaking to Hong Kong-based South China Morning Post, expressed, quote, "Many people have already recovered from COVID-19 and are willing to come out and shop," end quote. A restaurant owner expressed similar optimism, telling the same outlet, quote, "There's an obvious uptick in the number of shoppers. The past weekend we had a full house, and the same goes for other restaurants here. People are coming out again," end quote. Some analysts point out that Chinese households are sitting atop the biggest pool of new savings in China's history, accumulating $2.6 trillion of bank deposits last year alone. We should note, however, according to a report recently released by investment bank China International Capital Corp., about half of this extra savings is likely households redeploying riskier investments into safer ones, and thus this is not capital that can be splurged on consumption. Other analysts warn that while there will be a rebound, its most explosive period will be short-lived, and consumption will likely not see pre-2019 levels. One domestic analyst at a Hong Kong advisory expressed, quote, "The Spring Festival holiday consumption market will see a decent rebound, but it may not recover to pre-pandemic levels. It may be a moderate rebound instead of revenge or better-than-expected consumption," end quote. And, quote, "There's an overestimation on the splash of Chinese consumers. The excess savings won't be easily spent," end quote. Indeed, the chief economist at Kai Securities forecasts this week that households remain shell-shocked and extremely cautious, not to mention that incomes have been hit. His team only expects approximately 1.5 trillion yuan of excess savings will be redeployed as consumer spending this year, equivalent to just 3% of China's annual retail sales. Only time will tell what critical Chinese consumption will be this year, but many businesses, especially in cities that experienced lockdowns last year, will need all the help they can get. Quote, "The lockdown measures last year had a devastating impact on retail businesses and severely hurt consumer confidence. This is a grim reality that everyone has to face now." End quote. Okay, that is today's episode of China Update. If you enjoyed the episode, don't forget to hit that like button. If you'd like to be part of the community that helps me keep this channel sustainable, I restrict sponsored videos to just a few a month, so the channel can primarily be supported by subscribers. Patreon and Buy Me a Coffee links are in the description below. Thank you everybody for the ongoing support. Thank you for watching today's video. Like I said, there may not be a video tomorrow, just a heads up. Have a great day wherever you are, and I will see you all on the next episode of China Update.